qualify as
They take advantage of the United States generosity, but the problem is that we want immigration. We want legal immigration, people that want to make the country stronger. We're a nation of immigrants. We understand
the right kind of immigrants.
I'd like to say publicly, Iran, that you control the Strait of Hormuz, but you don't have a navy or real domain awareness. You can't control anything. To be clear, threatening to shoot missiles and drones at ships, commercial ships that are lawfully transiting international waters, that is not control. That's piracy. That's terrorism. The United States Navy controls the traffic going in and out of the strait because we have real assets and real capabilities. And we're doing this blockade, performing it with less than 10% of America's naval power. The math is clear. We're using 10% of the world's most powerful navy, and you have 0% of your navy. That's real control, and we have a long track record of dealing with pirates and terrorists.
Well, we're leading in AI because of me. We're leading. You know why? I'm letting them build their own electric power plants. They're becoming a utility. I said to Mark Zuckerberg, congratulations, you're in the electric business. Because if I didn't do, that was my idea, actually. They're building these massive plants, and if they took it from the grid wouldn't be able to handle it. I said, no, if you want to build it, you have to build your own power, and then they will be giving excess power back into our grid.
They thought I was done.
And these things are all under construction right now.
So we're beating China. Wallstreet tried to bury me.
We're beating China on the economy.
God had another plan.
Remember, if I didn't want to make that little journey to Iran, that was a journey. I said, we're going to have to do this for the good of the world.
Hey guys, Carlos Cortez here with another episode of Scriptures in Wallstreet. Want to say thank you to our new listeners on the audio side. And we are now on Spotify and Apple Podcasts. And I haven't been able to really focus on the audio version because I've been so visual the past 4 or 5 years. It's only been a video podcast, but hey, we're growing. And I appreciate you tuning in on the Audible side. For those of you that are interested in putting us in your pocket or in your car or wherever you want to listen to, you can go to Scriptures in Wallstreet, download us on the Apple Podcast Store, as well as Spotify. So Scriptures in Wallstreet, pretty much in 4 different areas. We got Rumble now, YouTube, Spotify, and Apple Podcasts. So I appreciate all that are listening. Thank you so much for your support. As you guys know, everything on this podcast is meant for information and education purposes only. I'm not giving investment advice. If you would like a consultation to receive investment advice, give us a call, 813-448-3446. Again, 813-448-3446, or simply visit us at cortezwm.com. So there's been a lot of talks in the media about private credit. There is a lot of noise with the Straits of Hormuz, gas going up. Inflation is really not where it needs to be. There's so many things happening with the Straits of Hormuz, gas prices still going up. But what do we do when people own precious metals and it goes down when the market goes down? You see, we saw this in 2008, and I tried talking about this, quite frankly, and people didn't want to hear it because they're so emotionally attached to precious metals, thinking that this is going to be the safe haven. This is going to be the gem. This is going to be the vehicle to get us to retirement. But here's the crazy thing that a lot of people forget. And it's not really crazy. It's just a very common mistake. And it's simply that we forget when everything goes up to a certain point, there's an implied volatility that happens. The volatility to get to where it is the same implied volatility to get it right back down. And yes, I'm talking about real estate. I'm talking about gold and silver, and we see it in crypto. This isn't everything. And this is why I label this podcast the Everything Bubble, because we're starting to see phases, guys, where there is no safe havens. If you currently have money in the bank, a 401k, or even precious metals in an IRA, you may want to listen up. You're going to want to have a place where you have a guarantee on your funds. As we go into a lower interest rate environment, banks will be stressed out when the commercial real estate crisis happens. Right now, you can get a guarantee, yes, a guarantee on your principal, and get a bonus. If you're younger than 65 years of age, we can utilize an insurance-based contract that has been around for over 100 years. We want to help you find a guarantee on your funds that are actually outside of banking laws, outside of securities laws. And guess what? You get a guarantee on your funds. You get a guarantee on your principal. Go to greenmoneysolutions.com, fill out your information, and let's just see if you qualify. There is no safe havens. The safe havens are not being talked about. The safe havens aren't the investments from pre-Great Depression. Gold and silver is not your safe haven. You saw what it just did. Imagine if you had a precious metals IRA and you had millions of dollars in it, only to you're 65 now, and now you only have 300,000 or 400,000 after having $1 million. That would devastate your retirement. And more importantly, even if it was up, did you even sell a portion of it? Or did you think that it will continue to go up forever? You see, the market crashed in 2008 and in 2001 in precious metals. Gold actually went down. It didn't go down like equities, but it still went down. And we see that here with this correction. We had a 10% correction in the NASDAQ. As we speak right now, the NASDAQ is only up 1%. And we had NVIDIA, we had the massive returns of silver, which obviously drove tech. And America is still the number one place for big tech. We are, whether you like it or not. Big tech is all of America. And the NASDAQ is only up 1% year to date. It literally took a massive correction this year. So I say all this is because we're getting lazy on our investments. We're getting lazy in a lot of different ways, maybe in our faith, maybe in our marriage, maybe in our relationships, maybe in our fitness. It just shows up because we just want it easy. We want someone to take care of it. And there's nothing wrong with somebody taking care of it. But the big step is actually you doing something about it. Have you interviewed an advisor that can help you, that understands the everything aspect of how all this comes into fruition? We haven't even really talked about printing money. We haven't talked about the unsecured debt that is about to happen. I think the private credit is just a small little tip on the iceberg of what's to come. You see, in 2008, it was the mortgage crisis, the subprime mortgage crisis, but banks were lending like crazy. I mean, if you had a 0+ credit score, 3% down, 5% down, you could get a mortgage. Like, it was nuts. You guys remember that? If you currently have money in the bank, a 401k, or even precious metals in an IRA, you may want to listen up. You're going to want to have a place where you have a guarantee on your funds. As we go into a lower interest rate environment, banks will be stressed out when the commercial real estate crisis happens. Right now, you can get a guarantee, yes, a guarantee on your principal, and get a bonus. If you're younger than 65 years of age, we can utilize an insurance-based contract that has been around for over 100 years. We want to help you find a guarantee on your funds that are actually outside of banking laws, outside of securities laws. And guess what? You get a guarantee on your funds. You get a guarantee on your principal. Go to greenmoneysolutions.com, fill out your information, and let's just see if you qualify. We're starting to see this in private credit. Private credit goes down. And look, interval funds I'm very familiar with, you know, the Blue Rocks, and there's Apollo Group, which was a fund that I used to like called Gyrex, Griffin Capital, really big into private funding. That was a great company at that time. And what what basically happens is when you have an interval fund, it has real estate involved in it. You only have about it's in the prospectus. You only have about 5% of the whole total fund that could be liquidated. And you got to have a quarterly request. So every quarter you have a ability to request your liquidations. This is common. This is common in any interval fund, and most private credit funds have a stipulation in their prospectuses that only 5% at a time could be liquidated. And they have the right to refute that withdrawal, anything over 5%. Because when you bought it, you were told that, hey, here's a prospectus. This is red money, guys. This is part of the red money system. When you have red money, you are subject to all the security laws and all the volatility, and this is just a part of it. But private credit is just an early sign of what is to come. I think that private credit is going to be a bad situation for America. You've heard me talk about commercial real estate. We've never had an answer for commercial real estate. Well, a lot of private credit is in commercial real estate. And we might just see just a little bit here. And so if there's no private credit, the businesses can't operate. There's no land there. Real estate will take a massive hit. Real estate's another thing that has been surging all over the place. So what? We reduced our interest rates from 7.5 to 7.1. Now it went right back up, or 6.1, and now went right back up to 6.31. I don't know if you guys know that mortgage rates went back up. So prices continue to stay stable, especially here in Florida, and they haven't really come down that much. So we have wages that can't keep up with this cooling inflation, so to speak. Keep in mind, we're supposed to be getting a new Fed chair next month, supposedly. And Trump's going to help nominate this one that's probably going to try to bring interest rates down to 1%. If that happens, they're going to have to print more and more money. Money that we don't have, by the way. I don't need to explain what kind of deficit we have. We can go to worlddebtclock.org and you can just see what those numbers are projecting, and it's scary. Like I don't even know how to pronunciate those numbers. It's that big. So what do? We see Bitcoin going down, going back up, going back down. We have plenty of people calling, hey, I need to sell my silver. Why are we selling now versus, 2-3 months ago when I said sell it? And by the way, if you are trying to unload your precious metals, I would do it in stages and not all of it, because there is something called a melt value. And a lot of the time, guys, when you log into your equity trust or your Gold Star IRA, those market accumulated, the accumulation value is not the true value. There's a melt value. And also when you go to sell it, it typically takes about 2 to 3 weeks to sell it. And you're going to get that price at that time. So if the dollar keeps on going up, and we'll take a look at the chart here, your precious metals will continue to go down. It is not the safe haven that you thought it would be. Now, we know silver has a street value that is a lot higher than the spot price value. It's a precious commodity for a reason. I still think it'll go up. But right now, for those of you that are trying to retire, if you have IRAs and 401ks, I would not be in a red money bucket as high as the dollar has been pumping. We'll take a look at that. But the safety haven of precious metals is just not there, guys. It's not there. You bought it to be safe. You bought it because the dollar was crashing. You bought it because you didn't want the government in your pockets. But then we go and buy an IRA, which is owned by the government, and you're buying precious metals. So it doesn't make sense. It doesn't make sense to have something volatile that's not safe in an IRA where you can't even write it off. So even if it does go up, let's just say you're right and I'm wrong. Let's just say it goes up. Great. Your 100,000 is now worth 500,000. What are you going to do to pay the taxes on that? That's $400,000 that you owe on that growth. You don't know how much you're going to pay in taxes. And meanwhile, are you taking Social Security while you're pulling money out of the IRA? If that's the case, then you can only hope that you take it at FRA, full retirement age, and not pre-FRA. Because if you take it before your full retirement age and you're on Social Security, then all that money you pull from your precious metals IRA now becomes penalized. If you make over 23,500 in the year of 2026, that earnings test number changes every single year, by the way. So when you're on Social Security, you are on a welfare program. Just know that you better look at your earnings test if you decide to take Social Security before your full retirement age, because that is a serious deal. I can't tell you when you're going to listen to this podcast or how or what platform, but I can say for future podcasts in the future, if you're listening to this in 2027 or 2028 or 5 years or 10 years from now, whatever it is, just always be sure to check the earnings test of that year. And whatever you have in your IRAs, if you are before your full retirement age, they will penalize you. Typically right now in the year 2026, for every $2 that you make, you got to give one back. That sounds like a 50% penalty after your earnings test. It's pretty low when you're pre-full retirement age. When you get to 67 or full retirement age, typically, they will allow you, if you're turning that year, they will allow you to make over $63,000. If you currently have money in the bank, a 401k, or even precious metals in an IRA, you may want to listen up. You're going to want to have a place where you have a guarantee on your funds. As we go into a lower interest rate environment, banks will be stressed out when the commercial real estate crisis happens. Right now, you can get a guarantee, yes, a guarantee on your principal, and get a bonus. If you're younger than 65 years of age, we can utilize an insurance-based contract that has been around for over 100 years. We want to help you find a guarantee on your funds that are actually outside of banking laws, outside of securities laws. And guess what? You get a guarantee on your funds. You get a guarantee on your principal. Go to greenmoneysolutions.com, fill out your information, and let's just see if you qualify. So under full retirement is $24,480. So every $2 you make, $1 is held. That sounds like a 50% penalty. And if you're reaching FRA 65, at least 1 month ahead of full retirement age, which the government determines when you're going to get that, it's $65,480, $65,160, or $54.30 per month if you are full retirement age. So that's about a 33% penalty, roughly. So be very, very careful, guys. What I'm saying, a lot of people put so much emphasis on the IRAs and the precious metals, but they don't understand that the whole thing is shifting, guys. We are going into an everything bubble, and I want you to be prepared. I have some suggestions. Of course, I can't give investment advice, but in this, everything is for information, education purposes only. But in my opinion, these are going to win when we see a massive, massive market correction. And look, we could have a massive correction the size of the Great Depression, maybe even bigger. Private credit goes haywire. We have $6 gas. We have civil arrests all over the place. They can't even get the interest rates right. 401k withdrawals are all-time high. Repossessions are back with automobiles. Wages are not coming up. The job markets aren't as strong. The labor market's not as strong as we thought it would be. GDP is really not even there anymore. Guys, we've been in a artificial market for 17 years now. Ever since 2008 and before, the government has been stimulating the economy. They've been stimulating the economy so much that even with all this junk that's been happening, you remember like back in 3 years ago, if you've been listening to me, I said, I don't even know how to explain this. Like, why is this not going up? Man, what was it? It was the banks, commercial real estate loans. You remember I was talking about UYG, and I was talking about like the banks and KRE. Yes, we'll look at KRE in a second here. We're looking at KRE for a long time. And maybe we need to go back to that, because I really want to watch the banks as we go into this. And so when the Fed starts injecting money back into circulation, they're going to give it to the banks. That's what they do. And we haven't seen, even after these little corrections, these little mini drawdowns, it always ramps back up. Haven't you guys realized that? Why is this happening? We literally have foreclosures at banks. We have bad debt at banks. We had the Toxic Asset Relief Program, the TARP, in 2008. Ever since then, it's been bumping like the 90s, but it hasn't been organic. It hasn't been organic. So there's been stimulating the economy like you wouldn't believe. They issue treasuries and they're buying them back, which is the same thing as printing money. Issuing treasuries, and buying them back. Well, let me tell you something, guys. Now that you know that your safe haven isn't precious metals anymore, what is a safe haven? Is it the real estate? Is it the land? Is it anything you can grow in the ground? Well, one safe haven I do know, and you can agree to disagree, and that's okay, is based on history, we're going to see treasuries rally like you wouldn't believe. I really think that the dollar is going to start popping back up and treasuries are going to go up. I know I sound crazy when I say this, but people forget that in 2008, the treasuries were up. The bond market was up like crazy. And I think we're going to see that here. As people get out of precious metals into more stable funds, the stock market will go down. Bitcoin will go down. Your precious metals will go down. Maybe not as much as the stock market. Your real estate will go down. Your preferred stock will go down. There will be defaults. Definitely real estate is what is going to be a shocker for many people. There's going to be 2 or 3 assets that are going to do extremely well. And I want you guys to understand that I'm not here to tell you what to do. I'm just here to give you financial information. You can do as you want with it. Or if you would like a retirement plan based around everything I'm saying, then give us a call, 813-448-3446. If anything I say resonates with you. Now, you guys know I'm not a hype person. I'm not the emotional guy. I want to just hold your hand and be a coach to you. But what I'm going to share with you is pretty stinking interesting. And I know we have some audio listeners that can't see my charts, but I got to bust out some charts. Maybe you can check it out on the Rumble channel or the YouTube channel. So here we go. This is going to be the US dollar, and this is on a daily. Let me show you the weekly real quick. So here is the US dollar. As we see it surging, and we see a little dip here. This is on a weekly chart. We now have a daily chart. But more importantly, we have a golden cross where the price of the USD has surpassed the 200-day moving average. So we get a green box here if we're looking at the trading view. And typically what we see is just a massive momentum going up on the US dollar. Now, we've seen it cooled off a little bit. But as you guys know, this is just one ebb and one flow, and it'll continue to prop back up. We have implied volatility of 94, meaning that, yeah, we're going to see some more volatility in the dollar. All right. So that is the reason behind all this as I started looking into this. But I also want to get back to something old school here, which is pretty powerful. And this is this is going to be a position that if you feel that we are going to experience a massive market correction, Harry Dent has said this. I myself has said this. And a lot of my mentors have said this plenty of times. I missed it last year. I got a goose egg on this. I made a mistake. The timing was off. Actually, I didn't make a mistake. The timing was off because I thought the Fed was going to act a lot sooner, but they're always late to the game. Anyways, I'm going back to my TMF trade. What I love about this TMF trade is that, I was expecting this thing to go to 100 late last year. From January all the way to December, I bought a 1-year call option. I lost everything on this. And if you took the trade, you lost everything on it too. And that's why I said trade with very, very limited risk by not putting a lot of money into it. But I want to say something here. TMF is basically TLT. So if you don't want to take as much risk, you can buy TLT. Tom, Larry, Tom is a ticker. And this is not investment advice, but this is going to be a combination of 10-year and 30-year treasuries. And what this actually is composed of, we call it a 20-year. This is an amazing ETF that you could park your money in. Now, I don't expect it to go up overnight. I think it might take a good year, maybe even 18 to 24 months. It's going to take a while. It could come closer, but I really think this is still going to pop because here's what's going to happen. The stock market will eventually go down. Everything will go down, real estate, private credit, and we will see things about a recession. And the Fed does not want us to go into recession. But one thing they cannot help is literally the consumer confidence. Once that consumer confidence goes to a whole new level, everything just falls apart. And in 2008, it was that subprime mortgage that literally, the auction rate securities, the subprime mortgage that literally took everything out. The consumer confidence was terrible. I think we see something very similar when it comes to private credit. I don't need to show you all the articles and read all the articles and what Jamie Dimon is saying and the experts saying, oh, it's not a big deal, blah, blah. I'm not worried about it. I'm worried about it. Not about an imminent market crash. I'm worried that you're just going to get stuck left with the bag and you didn't really do anything about it. That's what I'm worried about. If you currently have money in the bank, a 401k, or even precious metals in an IRA, you may want to listen up. You're going to want to have a place where you have a guarantee on your funds. As we go into a lower interest rate environment, banks will be stressed out when the commercial real estate crisis happens. Right now, you can get a guarantee, yes, a guarantee on your principal, and get a bonus. If you're younger than 65 years of age, we can utilize an insurance-based contract that has been around for over 100 years. We want to help you find a guarantee on your funds that are actually outside of banking laws, outside of securities laws. And guess what? You get a guarantee on your funds. You get a guarantee on your principal. Go to greenmoneysolutions.com, fill out your information, and let's just see if you qualify. For those of you that want to get something less riskier, TLT, I really think this is going to be a better play than any other thing that you could buy, like precious metals or something that it's red money. Let's see here. So TLT. So look how we are at a pretty much a good low here. It's trading at 86. If this can come down a little lower, this would be a great price to, this would be a great segue to protect yourself moving forward. Because when this market hits, this is going to pop up like crazy. So for those of you that know, I'm a big call options guy. You could buy call options on TLT. My favorite is going to be TMF. And I would get as long put out for as long as you can. And if you buy the call option, you can buy anything over 50 or 75, and that should be a strategic play. And I really think that the treasuries are going to do well. We've seen metal crash. We've seen real estate crash. And we've obviously stocks are going to be the first to go because they're extremely liquid. But as private credit, unsecured liabilities, all these things come pressuring into our economy, it is more evident than ever that you need to get out of passive stocks, passive mutual funds, and start being more tactical. And remember what the scripture says, the passive pay the penalty. Let's not be that passive when it comes to all the signs that we see right now. This is not hype. Dollars pumping up, precious metals going down, diesels are almost at $6 a gallon if you're driving a truck. Mortgage rates are popping back up. Jobs are not as strong. 401k withdrawals are all-time high. Repossession of vehicles are creeping up. Student loans can't be paid. And new construction homes aren't as high as they were. So we see a lot of leading indicators going into this. NASDAQ is at 1% year to date. We've had a massive correction. We've lost all of our gains for the NASDAQ for the year and just in a few weeks. And we're only at 1% year to date on the NASDAQ. So I say all that because this is going to be one layer of protection. You don't want to get caught with your pants down, guys. And I don't think this is a long-term play. I wouldn't want you to hold TMF forever. But if you want some type of ability to make money on a stock market crash, it's going to be TMF. Or the other one, you guys heard me talk about this. And most advisors won't tell you about this because they can't offer it. And this is not something I offer. This is just something I talk about. So you can get this on your own. I'm not here to make money off stock recommendations or stock tips. That's my previous career. However, SPXS, you want to buy these things when they're near the all-time low. So right now we're at 32.60. And look at the drawdown on this. That means people have been buying up the stock market. Yeah, it's going up. The bro investors are like, man, this stock market's great. We have hope of the Strait of Hormuz. We have gas coming. So this is all going to be great. Meanwhile, private credit funding is collapsing. Meanwhile, they're changing the retirement age on your portfolios. They're changing all the laws. Meanwhile, the banks are making moves. France have already unloaded billions, their whole gold reserves of the country of France out of New York City, sold it, their gold, and bought it all right back, new printed or minted gold in France. China has secretly been selling off our treasuries from 1.3 trillion, 1.6 trillion to 800 billion. And look at this, guys. If the market isn't prime for a correction, I don't know what is. This is going down. If you looked at this particular stock in this chart, I know you can't see if you're on audio, but if I panned out for daggone, oh my goodness, let's just say the past 5 years, when will be a good time to buy this sucker? It literally is at an all-time low, SPXS. Now, for those of you in audio, I'm looking at a chart and it just shows this massive, massive drop the past 5 years on SPXS, which goes down when the market goes up. So common sense is you're supposed to buy low and sell high. Well, this is automatically put all the political, put all the technical analysis out of your head and just look at this from an investment standpoint. We have a long track history on this already. Like this ETF came back right when leverage ETFs started back in 08 and 09. But it's never been this low. It's never been this low. Obviously, because the stock market's never been this high. But you want to buy things when they're at a discount. And what greater way to protect yourself and make money off a next market crash than to look at SPXS? So that's option 2 here. Again, you don't need my expertise. If you want some investment advice, you can give us a call, 813-448-3446. I'm just letting you know information out there that this is how you make money when a stock market crashes. You buy these leveraged shorts. You will lose money if you hold this long term. I will say that. You will lose money if you hold this long term. This is only a trade. This is meant to be a trade, not in a retirement vehicle. So I want to make sure I'm clear on that. For those of you that have been following me, you understand that I'm pretty good at calling trends, and especially with the precious metals. I've been on that like crazy, and some other call options. You guys have called and said thank you or emailed me. Again, not investment advice, but I really like this play. I know I missed it last year, and this is something I would only put a few bucks in. I wouldn't put a lot of money into this. This is a risk play. As common sense as it is, you want to buy when it's low. Interest rates are still going to have to come down. With Trump bringing on a new Fed chair, he's going to find somebody that's going to lower interest rates. When those interest rates do go lower, this is going to shoot right back up. Not as fast as we like to think, but this is 3 times TLT basically. So you can buy a TLT if you want something more conservative, but I would buy a call option as far as you can out. 2027's mid 2027 call options. Anything above 75, you should be in a clear. Right now, this is trading at 32. You don't want to spend more than $1 on a contract. So if you're looking at the call options, and if you don't have an options agreement at your brokerage firm, then all you have to do is call them and say, hey, can I get an options agreement so I can buy some call options, some naked call options? So again, not investment advice, just giving you information. But yeah, this is going to be in a massive way to protect you, or actually gain while everybody's losing. This is a really, really cool way to backdoor step. The other one, which is my favorite, is going to be our green money solutions. So if you're worried about the banks, if you're worried about market correction, then the bond alternative would be an insurance contract through Green Money Solutions. What I love about this is that we're still making money in these sideways markets, in these weird markets. Clients are getting 8, 9, 10, 12% returns. Of course, past performance is not indicative of future results. But man, we are kicking butt on the green money side. I'm so happy personally. But more importantly is that I get excited knowing that we can protect your money outside of the stock market, outside of all of this nonsense that's going on. We want to be able to get you in contract law. If you currently have money in the bank, a 401k, or even precious metals in an IRA, you may want to listen up. You're going to want to have a place where you have a guarantee on your funds. As we go into a lower interest rate environment, banks will be stressed out when the commercial real estate crisis happens. Right now, you can get a guarantee, yes, a guarantee on your principal, and get a bonus. If you're younger than 65 years of age, we can utilize an insurance-based contract that has been around for over 100 years. We want to help you find a guarantee on your funds that are actually outside of banking laws, outside of securities laws. And guess what? You get a guarantee on your funds. You get a guarantee on your principal. Go to greenmoneysolutions.com, fill out your information, and let's just see if you qualify. And here we go. Here are the banks. Here's KRE. Just a side note here for those of you that are listening online. KRE is at 69.26. I was talking about this when it was at 48, and it was going up when we had those bank failures happening recently, just last year. It was going up, and it's now continuing to go up. They're printing money. They're infusing money, and this is the manipulation that we just see. How is the financial system increasing when we're going through all this stuff? Just ask yourself that simple question. Well, it's because it's being stimulated. Yes. So we got to be extremely careful, guys, because all this will eventually bust in a burble. And what I love about what we do here at Cortez Wealth is that we're able to simply mute out the noise and get into a position where our clients can protect their principal. They don't have to worry about the manipulations of the stock market. They like stock market returns, but they like the ability to have a contract that guarantees their principal outside of the stock market with a company that's been around since the Great Depression. It's A-rated. It's not going to invest in things that they don't agree with from a value standpoint. And what I love about this is that if you can live under 10% free withdrawals, you can have an account that literally doesn't charge you a penny a year, free. I charge 1% on a managed money side, but these accounts, they don't even charge anything because they give you what's called a participation rate. For instance, if the index does 10%, if you have an 80% participation rate, that institution is okay paying you 80% of that 10% gain and they make 20%. And I'm okay with that because that's never a fee. It's almost a pay to play. Like that they only make money unless you make money. And all that money and interest that you've made now gets locked in as your principal. Where I see clients utilizing these effective tools is in pre-retirement, even 40-year-olds like myself. For instance, for me, if I put 100 grand in, which I did back in 2003, you can put 100 grand in, and in 20 years, it's projected to be over 4.25 million because there's no fees, there's no losses, and it grows with an index. Now, if you're 60, 65, we can still utilize these type of accounts and just pull off the interest every single year. You don't have to worry about the FDIC garbage. You don't have to worry about, does my bank is it going to fold because there's no reserves? These contracts have dollar for dollar reserves if they're A rated. Some have a dollar for 10. The higher the A rating, the less you make. Unfortunately, that's the way it is. So B rated companies, I rarely write them, but man, some are too good to pass up, and they run just like an A rated carrier, and they have 87.5 cents to 93.5 cents to your dollar. That's still much better than the FDIC that literally has less than 1% of your money in the reserves, which they're going to loan out to Pablo, the landscaper, or Joe, the plumber, which they should. They should make money off of your money and give you certain back. But unfortunately, they only give you peanuts, 0.25 in a money market or less than 1% in a CD. And even if they increase the CD rates to 3.5%, 4% on a 3 or 4 year, you're better off having a green money account because you actually have reserves. You have contractual rights to your money. Unlike the bank, you lose and forfeit your money to the bank as soon as you make a deposit. And this is why you see any type of liquidity crisis. You remember in COVID, remember just recently when we had a credit crunch or inverted yield curve or even gas prices. Anytime you see any sort of crises, you will see the banks do funny things like lower your withdrawal limit on a day-to-day basis, shutting down locations, becoming more virtual, literally robotic, automated tellers. No need for tellers anymore. You can go into our branch anytime, 24/7, and you can go to an automated teller. So the robots are running it. Don't get me started on robots. But these are just signs, guys, that why are we in that system when we have a green money account? But most of the time, the advisors that you speak to work for these big conglomerates that they have to continue to push the big agenda. And I walked away from that and started my own so that I can be a green money advisor. So I can have the ability to give you a home where, hey, my principal is protected here. I have a place where my money is guaranteed. I have a place where I may not make as much as the stock market, but sure as heck, I'm not going to lose anything to the stock market. And I'm okay only having access to 10% a year. As long as there's some growth, as long as there's no crazy fees, as long as there's no manipulation, I have the right to my asset. It's going to be asset protected by creditors in most states. And if the stock market crashes, I make more money because I get all the upsides because my gains and my price is locked in every single year with no risk to my principal. It's like going to a home plate and swinging for the fences and never striking out. You could ask my buddy Josh Hamilton, who I went to school with. The guy was a home run slugger. Unfortunately, he had issues with drugs and family issues. God bless him. We all have our own issues. And sometimes our retirement can be our issue if we don't take care of it. We could have the biggest potential, like my buddy, like Josh Hamilton, and blow it all up because he never took care of those issues. I don't want that to happen to you. I feel that God has given me a gift to speak life into you, to be knowledgeable of the markets, be knowledgeable and discern what is about to come without all the hype, without all the scariness, without fear, without the red money vibes. I want to be there for you to hold your hand in your retirement. I don't need the business. I honestly don't. I value it. I get a sense of belonging when I'm able to help an American patriot across state lines that I can protect your principal and speak your language, that we can be on a one accord spiritually, financially, economically, politically, it does something to me where I continue to podcast week after week, month after month, holiday after holiday, year after year. I am here. I've always said it, day one, as long as I can afford to do this, I will continue to do it. I will bring the truth. I'll speak scripture in your life. I will pray for you. I'll come here with a true heart. Sometimes I make mistakes. I am a sinner just like you are. But every single day, I will confess that Jesus Christ is Lord. Regardless, that's a non-negotiable. And there's a lot of noise right now. We have the left and the right, the Republican, Democrat. We have independent people coming. We have Trump looking at himself as Jesus and then doubling down, say, "Oh, I thought it was a doctor, not Jesus." We have bombed 7-8 different countries right now. I don't know how many countries. We have problems with NATO. We have gas prices that are unrealistic. We have people that can't even afford to live financially. And so what we need to do is turn from our wicked ways, heal our land, actually repent, turn from our wicked ways, and he will heal our land. Anyways, guys, I'm out of here. I love all y'all. If you guys want to get some peptides, don't forget to go to getmeleanusa.com. Get in shape, feel good, get some great energy and sleep, lose some weight, build some muscle, and have some mental clarity and have the ability to be intentional with your body, with your family. Everybody wants a strong husband, a strong father, a strong brother, a strong sister, a strong mom, a strong family member. Don't be that weak person. Take care of yourself. Take care of your body. Take care of yourself financially. I'm here to help out any way possible. All you got to do is give us a call, 813-448-3446. And don't forget to visit us at CortezWM.com and like and subscribe our Rumble channel, YouTube channel, Spotify, as well as Apple Podcasts. And I look forward to helping all you guys. If you just want to protect your principal from what is about to come, go to greenmoneysolutions.com. Also, you can book an appointment with us on CortezWM.com. God bless you guys. I am out of here, and we'll talk soon.